Good afternoon. Good afternoon, traders. Welcome to Paul's Monday Market Update, number 217 for Monday, 9th of March 2026. Great to be here. Hopefully, we will not have the tech problems that we had last week. Apologies again for that. I think that was just every man and his dog was on the internet that day, and for obvious reasons, which continue and give us a lot of the detail for today's session. Whether you're joining us live or whether you're watching the live stream, I hope that you can see the slides. Hope you can hear my voice. I hope that you are well and safe wherever you are joining and watching us from. The Monday market update is just that. It is me flying through as much as I can cover in the next 25, 30 minutes, looking at strength and weakness within FX markets, looking at some charts of interest to add to your watch list, and then a look at the live markets. It is not a signal service. There are no trade recommendations. It is just me sharing what I'm looking at, which may be of relevance or help and support to yourself. As always, you are very welcome here, but just remember you are always responsible for your own trading decisions. Also, if you want a little bit more help and support in your trading, regardless of how you trade or what you trade, the VTP Trader Accountability Group is up and running, helping people build discipline, accountability, and consistency in their trading. Okay. If you want more details, you can ping me, or once again, that QR code will take you to a page with more detail. Okay, on next to BlackRock, which might seem a little bit of a strange one when everybody in the world is looking at commodities and defense companies, etc. But I think it's kind of relevant to also just looking at the price action there. What we're seeing with BlackRock is that if you don't really know who BlackRock are, I mean they literally sit at the center of global capital flows. And in particular through its ETF platform and its institutional asset management side. And what we have seen is this kind of continued migration from active funds to passive ETFs. That is what has helped support kind of that long-time growth in BlackRock. But those of you who joined us, was it last week or about 2 weeks ago? I talked about Jeffries and about how we were starting to get issues in. We'd had a private credit company, a private equity lender, had gone bust in the UK, and we were talking about kind of UK contagion from that. Turns out BlackRock, have been exposed to that. They have also had to stop remittance from one of their global equity credit funds as well. Okay, that doesn't particularly look good, and it's probably flown under the radar whilst everybody's been focusing on what's going on in Iran. However, what we can see here is the price. That price has taken a pretty stern drop from coming into the sort of ending last year, coming in around about the $1,200 mark. Here we are last week, closing at 955, pre-market open at 940. Getting back beneath this sort of, this 50-period moving average. And we can see here on this weekly chart, all of the highs are low, and that was quite some considerable sell-off. So I'm looking to see, does it have enough to basically to sort of, is there a bump up to 1,000? And then look at, does 1,000 flip from being sort of, support into resistance before it kind of works its way down to the 200? That would be one of my scenarios I'll be looking at for BlackRock at the moment. If we see continued contagion from that's kind of the equity issues or the equity credit issues, but also just general sentiment, rolling over as well.